This video explores the mechanical application of cumulative rejection heat maps to identify areas of significant liquidity interaction and price sensitivity. Rather than focusing on directional bias, this approach utilizes a bin-based distribution model to visualize where market participants have historically defended or rejected specific price levels over a user-defined window. The analysis centers on price action normalization by calculating the wick ratio of each bar against the average true range, ATR. By segmenting the total price range of a look-back period into discrete statistical bins, the indicator maps the frequency of rejection events, instances where price failed to maintain momentum at a specific level. The resulting heat map aggregates these points to highlight potential support and resistance, S/R, zones based on the density of historical rejections rather than subjective trendlines. The dashboard component provides a real-time summary of these distribution patterns, offering a quantitative view of where the market is currently experiencing the highest level of volatility compression or mean reversion pressure. Learn how to configure look-back windows and bin counts to refine the resolution of price sensitivity data. Understand the relationship between wick-to-range ratios and the objective identification of market rejection points. Explore how to utilize density-based distribution to identify institutional-grade S/R levels without relying on standard indicator lagging. Master the interpretation of bar gradient visualization to assess the relative strength of price levels within a given range. Warning: educational software for analytical purposes only. Trading involves significant risk.